Alrighty, welcome everyone. This is going to be our asset protection and insurance for rental property webinar. Thank you everybody for joining us tonight. My name is AJ Bialik. I'm actually covering for Christy Dietz. Her mother is going into a emergency surgery, so she's not able to present tonight. So she asked me to cover for her. Our thoughts and prayers are going to go out to Christy and her family during this time, and we're going to pray that everything can be okay. Like I said, this is our asset protection and insurance for rental property webinar. We're going to go over everything that has to do with insurance and protecting any of your assets in this webinar here. So stay tuned for a bunch of slides and a bunch of good information. First off, just want to go over who Marshall Reddick is. Marshall Reddick is a full service real estate brokerage, property manager, and private lender. We really pride ourselves in providing white glove service to our clients. Our first division is real estate brokerage. We help buyers, sellers, and investors buy and sell investment properties and primary residences all across the nation. From California, Texas, Florida, Tennessee, Indianapolis, you name it, we can help you guys out. We're also a property manager, so we help landlords manage their assets. Right now, we currently have a footprint in California, Texas, Florida, and Tennessee, where we have boots on the ground management. We are a private money lender, so we offer non-owner occupied loans to real estate investors. And we also have an investment fund where, much like you can receive rent checks as a landlord, you can also own first trust deed mortgages and receive mortgage payments. You can do individual mortgages, or we have a mortgage fund, much like a stock index, that is expanded over 250 mortgages right now. So there's a lot less risk putting all your eggs in one basket with one mortgage. So we really have 4 divisions. We try to encompass everything in residential real estate and help out our clients the best that we can. Like I said, my name's AJ Bialik. I'm a licensed realtor and an advisor here at Marshall Reddick. I attended Concordia University here in Irvine in California, where I played water polo for all 4 years. I have a background in commercial real estate. When I was 24 years old, I started working in commercial, made a transition to residential about 3 years after and haven't looked back. I majored in exercise and sports sciences with an emphasis in education. So doing these webinars is really fun for me. I love to provide free education to my clients. It's kind of just my backbone of what I've done my whole life. And I'm starting my 8th year here in real estate, which is really cool. It's like time flies by when you're having fun. It's been a lot of fun since I was 24 years old. I'm intimately familiar with all of our Marshall Reddick markets, including Texas, Tennessee, Kentucky, and Florida. I'm married. I'm a father of 2 boys, and I'm an active real estate investor myself. I have a position in our mortgage fund, and my family owns a few properties around the nation as well. Here's just a snapshot of our national footprint at Marshall Reddick. Like I said, we have brick and mortar offices in California and Orange County, Los Angeles, Riverside, and the Bay Area. We also have offices in Texas, in San Antonio, New Braunfels, Houston, and Austin, Texas. We have offices in Southwest Florida, specifically Cape Coral and Fort Myers, Florida. And we have offices in Tennessee, in Clarksville and Nashville, which is really cool. You know, we try to stay with our management in very landlord-friendly states. And it's been awesome ever since we opened up those offices. We've really just been able to provide the best service for our clients. How we choose where to invest, we really do a lot of analysis on our specific markets that we choose to invest in. We want to make sure there's a growing job market. So for example, in San Antonio, Texas, you have Tesla that opened up a large warehouse just outside of San Antonio. You have Microsoft that's opening up a giant data center to the west of San Antonio. And you also have Amazon, who's opening up one of their largest distribution centers in West San Antonio. So to us, that's a very good growing job market. It's going to bring you great tenants that are A, B class tenants for your A and B class properties. In Tennessee, you have LG, which just opened up over there a few years ago in Clarksville. So you have a lot of LG employees that are, have really lucrative relocation packages to live over there, and you're going to get some great tenants as well. We always look for kind of suburban areas that are outside of the main metropolitan that are going to have very low vacancy rates, economic diversity, housing affordability. Like I mentioned before, landlord-friendly states is huge. I think other than California, Texas, Florida, and Tennessee are very landlord-friendly states. We always want to look for strong education. Are there good universities around? Are the school systems, the public school systems, strong? And then is there reliable property management? In the past, before, I think we started our property management here in 2017. In the past, before 2017, we had to refer all of our investors to third-party property management, where we didn't really have control of their experience after they acquired the property. So that's why we actually created our property management division and have grown it so much over time, because now it really allows us to provide that white glove service for all of our clients. So we started that in 2017, haven't looked back since, and we just surpassed 3,000 units that we manage nationwide. So enough about me and Marshall Reddick. I'm going to hand this over to Stan Dreckman. Stan's been a licensed insurance agent for 45 years, property manager for over 20 years, and he's just a wealth of knowledge when it comes to anything regarding insurance for your investment property. So I'll let Stan take it from here, and it's going to be a great presentation tonight. Thank you.
Well, thank you very much. Appreciate it, AJ. Yeah, we've been around a while. I definitely have the stripes. Been in 45 years or so. Michael, who's with us, you see him on the screen, he was in property management, commercial and residential, for a very long time. So we actually have people covering both sides of the spectrum who understand it. That's just a little bit extra knowledge about what you require, what you need as property owners. And it also allows us to know, by my time here with Marshall Reddick and by Michael's time as property management, how important property management is to you. You'll see throughout this whole presentation, we're going to be tagging property management. That will save you a ton of money and a ton of heartache, and will make the landlord experience a tremendous opportunity for you. It's going to be fantastic, and with the property management from Marshall Reddick, even makes it all the better. So here we go. Let's see what we got. What's the purpose of insurance? You all know that one of the big purposes of insurance is to allow you to get that loan. You got to have it. But really what it's about making you safe from the loss. I mean, it would be like you had this really great stock you bought and it tanked. Well, you can't really buy insurance. You just lost a couple $100,000 on that stock. Here, if your house gets nailed in a tornado like we had recently in one of the areas, you have insurance that's hedging your bet for you. So they're putting it back together actually better than was, and it's a fantastic process that insurance brings to you. It's secure and it helps you rebuild. That's just what it's all about. We're there to help. So, my arrows just left the house. Can you forward that for me, AJ? For some reason, it's not showing. It was there and then it didn't. There you go. I don't know what you did, but that did it. Thank you. There we go. Okay. So insurance, what does it cover? We're covering with landlord insurance 1 to 4 unit homes. We cover the structure, the detached structure, contents. We recommend that you buy a little bit of contents. You'll see in a bit how we structure it. That's for a not attached property that you provide for the tenant. We protect your loss of rental income. So if you have that fire, you have that bad windstorm, something like that, the rental income is continued for you. You're not losing. And then your liability protection, you're sued for injury, someone slips and falls, something along that line. That's what the insurance covers for you. On the property, here are the most common types of claims that you will see. Fire, wind and hail damage, windstorm, I already said that, vandalism, and then water damage is probably your #1 type of a claim. If you have a claim, it will probably come from that. We cover an awful lot more than that. We cover everything other than what we exclude for damages to your property, but it is these 4 items really are the primary claims that you will, if you have a claim, that you will experience. Flood and earthquake, just so you know, are extra coverages, the same all over the country as it is here in California. Those are extra policies if you want to buy them. In California, we of course highly recommend earthquake. And if you have a property that's camped along a river, you might want to buy flood insurance. So, what did I just do? Thank you very much. I don't know what I just did, but I did it. Can't take me anywhere. Sorry about that. The other kind of coverage that comes in your landlord insurance policy is liability coverage. The liability coverage is the part where if someone gets injured, that is where your insurance company comes through and defends you and pays the claim if you're liable. Great example is someone running through your property. If you happen to have automatic sprinklers, a child rips their foot on your sprinklers, they come to you and then we take care of it. The other part of the liability that's interesting, no one thinks about, is the property damage. Property damage, I give an example here. This has happened a couple of times where if you have properties that are terraced or just one's above the other for whatever reason, slightly higher pad, if sprinklers or water is going on all night from the home and you end up swamping the home below you, that's also liability insurance. So liability insurance is property and liability damage to other people, important coverage to have. This is what we would like to see you, how we would like to see you structure a policy if you buy a property. This is an example of a duplex in Seguin. This one was built in 2021, 2744 square feet. This is what it's going to cost to replace this property now if you have to, new for old. People sometimes they wonder why we establish these values so high. Part of your insurance value is the debris clearing. If you have a really bad claim, it's expensive moving all that stuff around. Then you have new architect fees, things like that. It's not just the building cost. So we go through a replacement cost survey in our systems, and this is how we develop the value. So in this particular property, we have $445,500. Then we have what's called an extended replacement cost. More and more companies are putting that on. We were really out in front with that. What this is about is this is your hedge, because as you know, particularly the last couple of years, the property values, as well, not only the property values, but the cost of building property has increased significantly due to cost of materials and labor. Nobody really knows how much it's going to put your house back together again. We got a really good idea. That's where that 445 comes from. But if you've ever remodeled a home, you know that there's always overruns, always costs more than you think. So we have a hedge of another 25% of the value, or in this case, $111,000 extra to help you rebuild that property so you're not coming out of pocket because we weren't able to properly establish the value. I mentioned a little bit ago about contents coverage, things that you keep for the tenants. So that's what we call rent-ready personal property. That would be an example like washer, dryer, refrigerator you might keep in the property, your ovens and stoves that slide in and out. Those things are all personal property. And so we throw a value on there just to make sure that if you have a fire, you're not losing out on that as well. Another thing happens when you have a fire is you lose your rental income. The rental income, in this case, based on this policy, if you see the math, you can see that it's exactly 10% of what the property value is. And usually that is enough, usually. In this case, I think that's more than enough on this duplex. And so that provides you an amount of money. So if there's a fire to one side or both sides get damaged, tenants have to move out, you still have income coming in during the rebuilding process. It's a very important part of your coverage. Because even though you have the fire, you still owe the mortgage company, you still owe insurance, you still owe a number of things. They're going to be using utilities on your premises, and things are going to cost you. So this is all what you want to make sure the rental income's coming in to help you take care of. Liability protection, we like to see at least $500,000. Most companies will cap it there. Sometimes you can get $1 million, but most companies cap it at $500,000 in terms of what is available. And then you buy your umbrella It sits over the top. We'll hit that a little later. Now, you notice something I have down here called extended liability coverage with PM. That's for property managers. Anywhere you go in the current United States, the property management company is going to have you sign a management contract. And in that contract, you are agreeing to name the property manager as an additional insured. It's universal. It's the way that it is. And it's necessary coverage for everybody, you and them. So always make sure we put it on automatically, but you always need to make sure that as long as you have a property management company, you have liability coverage extended under your policy for that. That's something that gets missed a lot by insurance agents. That's incredibly important to you. That covers you and your contractual arrangement. Medical payments, we keep that really low. Just so you know what that is, that doesn't mean we're only going to pay $1,000 if someone gets injured on your property. That's something that if someone has a very minor incident on your property, they hand you a bill for $430 because they went to urgent care because they tripped and hit their foot on a sprinkler, or whatever it might be. We'll probably just pay it and avoid going to litigation. But if there's any litigation over an injury, all the medical, all the defense, everything's in that $500,000 of liability coverage. So you're good. Ordinance or law. This is a very important part of your policy as well. Not as much on the newer ones, but since the freeze they had a couple of years ago, and with the freezes coming in now, these are going to generate changes in how the buildings are built. There was a big change in how the piping was affixed to the houses following that big Arctic blast of what was that, AJ, about 3 years ago? You remember that one? We had ice angels everywhere. So this coverage is very important. And because when they rebuild the property, your insurance that you're buying says that they're going to replace it with like, kind, and quality. And yes, we're going to extend the replacement cost value, but the ordinance or law picks up the changes in the building codes. Very important. That's part of your three-legged stool of a replacement cost. Very important coverage to have. This is how you want to put it together. We're showing here a deductible of $2,500 with a 1% split with the wind and hail. This is very typical in Texas. Most places, I won't say most, but there seems to be a trend in insurance. Many companies, I know Travelers has taken this move. There are a lot of other ones that are just doing percentage deductibles across the board, which would mean if you had a 1% deductible across the board on your property policy, here you'd have a minimum of $4,455 deductible. Here we split it. It's $2,500 for your fire, your theft, water damage to your property, but it's a 1% on the wind and hail. You can get higher ones to save money, but that's how you might want to start it. So, kind of just to review really fast where we were, I want to make sure you guys understand these three issues. It's very, very, very important. Replacement cost covers the property with like, kind, and quality. And we want to be able to replace your property. Sometimes we're seeing it less and less, but occasionally we run across a policy that someone purchased that is very, very inexpensive. And there's a reason for that. They have inferior coverage. So you don't want to go there. So that's something that you want to be very careful about, because they'll, on a very inexpensive policy, a lot of times those are set up on extra cash value standards, which means they'll depreciate a claim. You don't want that to occur. And again, on the extra coverage, the extended replacement cost, the second item, that is a very important coverage to have. We offer that everywhere except North Carolina. Most companies don't do that in North Carolina for whatever reason, so we just have to bump up the coverage there a little bit. The building ordinance coverage, where that's important, that, again, is your building code changes. So you want to make sure those three items are a part of your policy. Very important stuff. There we go. Okay, I'll get by that one. Let me give you an example. It shows you how this works with most companies, and then we will move on real fast to some real coverage issues. The total loss scenario on that policy of $445,000. Most policies will pay the $445,000 and they'll stop. Safeco will pay up to 125% of the policy limit. You have a total loss. In this example, this is not at all uncommon. It costs more. It costs 8 to 10% more to replace the property. So we're going to pick that up. In this case, we would pay $486 on a $445,000 policy. That's just a graphic example of what extended replacement cost means. Important to you to make sure you're fully covered. Here are some exclusions you need to know about property insurance. It's very important. If you look at them, they make a lot of sense, but sometimes people forget. And I mentioned already earthquake and flood. These items are excluded in your coverage for property insurance. You have to buy separate policies for that. Third item, very important. And this is why you want property management, because they know if you have a vacant property in the winter, say like right now, and there's a blast of Arctic air that comes driving down like now, and the water's not turned off and you have a vacancy, very good chance that water is going to explode into an ice angel inside the house, and it becomes very, very, very expensive. That is excluded after starting with the first day of vacancy if the house has not been winterized. Winterized is draining the pipes or keeping the heat on, something like that, so that the pipes don't freeze. Property management is going to save you from this exclusion. Backup of sewers and drains. You can buy a limited amount of coverage for this in some states, but most companies are going to limit you to $10,000 of coverage for this. This is a classic example would be vegetation roots get into the sewer lines because it gets hot and cold and they crack. And one day the tenant flushes and the next day they flush and it comes back into the bathroom. So that's water backup. That's coverage you can buy, coverage you don't have to buy. That's always optional. We recommend it, but many people don't buy it. I'd say maybe only 50% of our customers buy that. Other things you need to know. We don't cover pollution or mold damage to your properties. We will, however, apply up to $5,000 of coverage. In most states, some of them it's 10, but most of it's $5,000 of coverage if there is mold damage that results from the water damage that's covered. If you just wake up one day and your property manager gets a call from the tenant saying, hey, I smell something, if it just happened, that's not going to be covered in most cases. But if you have water damage, and we have had this, I'd say probably once or twice a year, we'll have this. Water damage occurs and it's just really hot and that mold gets going really, really fast. And $5,000 is usually enough to repair that. I don't think I've seen a situation yet where it wasn't. It could go over, but it's unusual if it does. Settling and shrinking of foundations, that's not covered also. Damage to unattached buildings. If a business is operating from it. The houses you're buying now, the newer homes that are being sold, these homes all are have the garages attached or built into the homes. If you buy a home that's maybe 30 or 40 years of age, you may well have a home with a detached garage. If the tenant turns that detached garage into Bob's weekend auto repair, and if he burns that garage down, there's no coverage. That's where your property management's going to stop this because they know they can't do that. So that is something that property management will fix, but be aware, any detached property being used for business purposes, anywhere from auto repair to Tupperware, there's going to be no coverage if that property is damaged or burns. There's no coverage for damage by pests and rodents or birds or animals. So you need your property management company there again is there to make sure by their regular inspections that doesn't occur. Other exclusions you're going to run across: theft of anything not permanently installed. Remember, this is not a homeowner's policy. This is a landlord policy. So if you're in between tenants and you're 2 weeks into showing the property and someone breaks in and tries to rip all the copper out of the wall at midnight, you have coverage for that because that is permanently installed. But if someone breaks in and walks off with the refrigerator, no, there's no coverage for theft because it's not permanently installed. It's coverage for fire and other damages, but not theft. Maintenance, planning, zoning, municipal issues. I know this stuff can get kind of boring when we get down to this point. These things you need to know. It's important that if you have a good example of that would be we had a property in California where a backyard patio just collapsed in the middle of the night. Thank God it was the middle of the night, nobody was underneath it. wasn't a big loss. It was only about $1,500 to refit it. But the people who installed it did it without a permit, and they used nails that were too small to hold it up. The buyer of the property didn't know that because it was already there when he got there. So always be aware of those situations. You prefer not to have anything, any non-permitted work. Wear and tear, that's where your property management is there, is to prevent the wear and tear. You're going to have it occasionally. Wear and tear is never covered, but abuse by a tenant, as opposed to vandalism, just abuse is something that can occur. I have a property many years ago that someone changed the oil inside there. It's kind of hard on the carpet, but it's probably wintertime, and that's the way it goes. So that's an exclusion. Be aware of those situations. Here's something, this is kind of a fun exclusion in a way, but it can be quite expensive to you. So this is where your property management company is going to help you a lot by inspecting the property. There's no coverage if your tenant reconfigures the home they're renting from you, reconfigures it to be a grow field or decides to turn it into a meth lab. So if anything that meth lab blows up, if the grow field causes damage to the interior of the property, we're not going to pay for that. Now, there's some ways you can protect yourself from that. Aside, most importantly, is the management company. But people that self-manage fall into this trap a lot. Someone comes in and is going to pay the rent you want. They're going to pay you cash for the first year. What a great deal. Well, there's a reason they do that. They don't want you in there. So you don't ever, ever, ever accept 1 year's cash in advance for rent payment. And the other obvious things, the tenant won't let you in when you go to the door to discuss the utilities bill that's kind of running awry. So be aware of those things. That's how you can always tell. But the most important thing, again, remember I mentioned up front, property management. Marcia Reddick team will be all over these things. These things will not occur to you. Liability coverage. Liability coverage is a little different than property coverage in the sense that it's about people being injured, or somehow your property causes damage to another property. So in a pure basic sense, it's if someone gets injured on your rental premises. The insurance company is there to defend you and to pay the claim for bodily injury, unless it's excluded in some other way, such as no one pays for your COVID claims, things of that nature. But the insurance company will pay for bodily injury someone sustains on your property. Great example is that someone comes to the door, the grass was just mowed, it's slippery when you walk on grass because oftentimes they'll water it after to make it look nice after they cut it, and it's like ice and someone gets injured. So that's, if they come back to you, you have coverage for that, they being the injured party. And obviously when it's codified by law, that's going to absolutely cause you to get involved in the claim. So there we are. So again, the trip and fall is important, but this policy also covers wrongful eviction protection against you. It doesn't happen very often. In fact, we were expecting a lot out here in California. It never really occurred to any great extent, at least not that I've seen, because we deal with property managers. I think people that didn't have property managers may have had a rough road potentially, but property management companies, particularly Marcia Reddick, they know what to do. They can keep you out of trouble and help you. So when you've evicted the people following these COVID situations, and they come back and try to sue you, then your insurance will defend you, and it will pay if somehow you're held liable. But that's just a really, really, really important part of the policy. We like to have that wrongful eviction coverage. Here are some takeaways from the coverage. Here are your exclusions. The obvious exclusions is the expected or intended injury. This is a car insurance claim, but this, you get an idea what an intended injury is. We had a person that we insured somewhere in the Midwest, and he got mad at somebody, chased him down in his car, got out of the car, threw his water bottle at the guy. The water bottle was frozen. It blasted through the guy's side window. Luckily, the guy wasn't too injured, but he sued the person that assaulted him, who was our insured. Our insured turned in that claim, and we denied coverage because that was an intended injury. He may have lost it, but he intended to hurt the guy. So no expected or intended injury results from violation of laws or ordinances to someone that you or someone commits on your behalf. Now, a great example of that would be, excuse me, would be, I coughed and clicked on it at the same time, would be a fair housing situation. This is why you want property managers to take care of your properties. You can very easily trip into a violation of law before you even know it. Suddenly you're talking about children, how wonderful they are and this and that, and somebody nails you because of a comment you made, which you thought was totally innocent. These things occur. Rendering or failing to render professional service, you're not going to be able to use this policy to cover your accounting practice, that kind of a situation. All locations on these policies have to be scheduled. These policies, one policy doesn't cover all that you own. You would be surprised. We get that covered, that question. Maybe once every couple of years, but it comes up. And we don't pick up punitive damages in California anyway. You get outside of California, some jurisdictions will allow. Loss assessment, liability policies don't pay for loss assessments you'll get from your HOA, but you can buy a coverage, whether it's a condominium or it's a single family home, you can buy loss assessment coverage. That loss assessment would be an example. If someone got severely injured and you own a single family home, but you're in a really nice development, it's a newer home, there's an HOA, you paid $50 a year for your HOA fees. Yeah, $3 million of insurance. Someone wins a $5 million claim, they're going to assess you. They being the HOA for the balance because they're going to have to. You can buy up to $50,000 of coverage on this, and if you're in an HOA that has a lot of members, in the HOA, 100 or so, your $50,000 is going to be more than enough for you to pay your portion how the CC&Rs develop it. So that's a coverage a lot of people will want to let go, but that's a very important coverage. That is one that will occur. Property damage to your own property, that's an exclusion, but that's why we have property insurance. That one's kind of obvious. There's no coverage for anybody who's eligible to receive workers' compensation benefits. That's why you have a property manager who will send in only insured personnel in to repair your property. This is not going to extend to boats, cars, airplanes, daycare operations, or pollution. Very, very, very important to know. Certain state issues can affect coverages, and these are things you need to know about. In Texas, you actually do have the ability to buy more mold coverage. You automatically get $5,000 of mold damage coverage to the property. And this is property only, as well as this present property only. We have it in the liability section. It's for the property. It's for damage to the property. You can buy higher limits. Nobody buys it because it's astronomical. It will cost you probably $3,000 to buy a couple $100,000 of mold damage coverage to your property. It's extraordinary. Tennessee, Florida, there's a special coverage you buy called sinkhole because those areas, they have sinkholes. You wouldn't think of Tennessee, but they do because they have a lot of rivers and lakes. We've never been subject to one, never seen one happen to anything that we insure, but it can happen. Many of you may remember many years ago in Nashville, the AJ, what happened? Anyway, I'll keep going while he's pulling it back. There was a cobra. There's a museum, a car museum, and a cobra dropped about 10, 15 feet in the sinkhole. They were able to recover it, but there you go. There we go. Okay. Anyway, sorry about that, folks. I apparently got a little whacked out here on my controls. I just can't see them. I'm lucky so far. The other thing I want to mention is in Kentucky, there's a mine collapse coverage you can buy, but I don't think there's any, where Riddick people, I don't think there is any mine that we have to be concerned about particularly. So here's some insider tips I want to give you. This is very important to know. These are some inside thoughts about your policies that can be good or can make for a very bad day. Vacancy. If your property is vacant, with our Safeco policies, we go up to 60 days. Many companies will only go 30 days. But after, say, 60 days of consecutive vacancy or occupancy, you will lose certain coverage: vandalism, glass breakage, theft, burglary, fire and water damage. That's kind of a big one. So do let us know as you're nearing. If you get to 50 days of vacancy, let us know, and then we'll prepare something to take over. And then we'll bring you back to our regular policies once you have that property rented and the tenants moved in. So that's important to know. Getting back to the burst pipe, I want to make sure I mention this to you again. This is important to know. Make sure your property manager winterizes your property so that you are in good shape should you have a water claim and a freeze. And on the vacancy clause we just mentioned earlier, in some jurisdictions, meaning some states, that if your property is vacant, it may void the contract in its entirety. So definitely make sure you let us be aware of the fact that you have a vacancy approaching 60 days. Be in touch with us, be in touch with the property manager, but they're going to know because they're showing it. We mentioned earlier about how the policies can be adjusted and things you need to know. And I mentioned actual cash value claims. I want to show you a graphic as to why the actual cash value isn't good. Here's an example of a claim. You have a property that's maybe 10, 15 years old. That claim is going to be depreciated probably down to $70,000 on a $100,000 claim, whereas a replacement cost policy with your building codes is going to pay the full $100,000. It's just that easy. Best price point for a 1 to 2 family home is usually $2,500. The values are getting so large now. We're starting to sign $5,000 if the deductible credits are good. So that's something to be aware of. Where you buy affects affects your cost of coverage. If you buy in the coastal area, you buy in Mobile rather, you buy in Miami, it's going to get pretty expensive because the wind gets pretty rough there and the seas get pretty rough there. Generally speaking, you want to the areas. In fact, I say in all cases, where Marcia Reddick is, you have the ability to buy a property where the prices are right because they're not in a typically heavy hurricane zone. When you get down to Houston, Harris County, that can be an expensive area. The nice thing about the areas where Marcia Reddick is, by the way, is they're not in Harris County, which is an expensive county. They're in Montgomery County. In Montgomery County, the prices are relatively benign in comparison to other areas. So that's good to know. The lower rates are in the areas where Marcia Reddick is in great shape. Again, I'm going to mention it again. Woodlands area they're in, Magnolia, that's Montgomery County, and those rates are very decent. Austin, the San Antonio corridor, very, very good. Clarksville, very good. Arizona, California, of course. Boise, Florida, all in the right places in Florida. All those areas you can get great rates, as opposed to being in the areas that are susceptible to hurricanes and tornadoes. Newer properties will cost you less from an insurance standpoint. We're seeing a real trend with roofs, where the roofs are, the companies rather, are starting to endorse policies that to depreciate after a certain age your recovery on a windstorm claim, because the insurance industry is finding that they're replacing roofs right and left. So that is a trend we're starting to see. Not in any companies that we use at the moment, except for one. We have one company that will start depreciating a roof after it's 10 years old. That's pretty steep. So we tend not to go there unless it's the only place we can ever get a policy. So we don't write many policies with that company. So be aware of those things. It's important to know any company you buy with, what is their policy on that. Your insurance score is important when you buy a property. Outside of California, this is something that can create a problem for you or create a bonus for you. You have good credit, like most of the people we run across through with Marshall Reddick, you're going to get discounts on your policies. On my property, I was one person I had many years ago. I couldn't understand why his insurance is so expensive in the Clarksville area. It's my property. I knew what I was paying. I put his information in my policy just to see how it would affect the rate, and the rate went up 50%. So we look at prior claims, and there's this called a soft hit on a credit score that is done everywhere outside of California, and that will impact your rates. Be aware of that. This is an easy one. We just suggest that you impound or escrow your insurance premium. Insurance premium is paid one time a year by the mortgage company, and yet you're getting a prepaid discount. It's kind of cool. We have multi-policy discounts within our Safely. If you buy a number of landlord policies from us, we discount each one. And with our program, we can go up to 20 properties outside of California. We can go up to 20 properties and insure them for you on a regular landlord policy. Many companies are cutting back on that now, but we are not. Tenants' dogs can be challenging. Be aware of this. This can be something that can be pretty brutal. Many companies have dog exclusions complete. They have certain breed exclusions, and they'll either become listed or they'll say as determined by your municipality. Your property manager can tell you about that. Just be aware of the fact that some companies will do a dog exclusion. And it's usually for the tough breeds. If you have a tenant with a dog, it's got a tough breed, they can get coverage through a company called Fido out of Florida that works with insurance companies that will give coverage for hard to place dogs simply due to their breed. Tenants can be a little challenging too, along with their dogs. So you want to make sure that your lease always, and I know Marshall Reddick does this, requires the renter to get insurance. It is important that they do that, and because you are not responsible for their property, and you're not responsible for them to live somewhere else if they move off of your property during a claim situation. Yes, you're going to forgive the rent while they're gone, but they have to pay to live somewhere else. If they have renter's insurance, that will help them do that. So by requiring that, you are helping them if something bad occurs. If the tenant is evicted and vandalizes the home, our Safeco policy will generally pay for this coverage. Most companies will not, or they will look at a multiple deductible scenario. Safeco will generally consider this one deductible, generally will pay for the damage, but they will parse out what they consider to be wear and tear and versus vandalism. Real income protection, again, we mentioned about how important that is. Rents are going up. Usually that 10% factor that we mentioned to you in the past is adequate. Every once in a while it's not. So always let us know what your rents are. If you're not talking to us, whoever you're talking to, make sure that you tell them what your rents are so you can have the right amount of coverage in place so that if you have a total loss, you've got your rent fully paid for the year. Keep information current with your insurance broker. I cannot tell you or emphasize how important this is. I would say once or twice a week, we're trying to reclaim a policy for a customer whose loan was sold. And of course, you would expect that the lending company that bought the loan from your former lender would have asked us for insurance, but they don't. Usually that information is transferred, but it happens quite often. And there's nothing worse than finding out that you have a claim, yet your loan was transferred, nobody knew about it, premium wasn't paid, and you didn't know it because you have your premiums paid by escrow. So always let us know what's going on. Always, 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 always. And we're looking for your new bank's loan number, which is going to be different, obviously, and their insurance mailing address. Always, always, always update your agent. Pricing is a very strategic way, obviously, to keep your cash flow as high as possible. So everyone's looking for a good deal. Use deductibles liberally. If you can afford a $5,000 deductible, we do recommend that. Over a period of time, it will save you money. And we don't recommend it just on the property. Keep your deductibles high on everything that you have. High on your auto collision coverages, high on your own home. keep your deductibles high across the board over all of your policies. You're going to find that in just a few years, you will have made up the difference between $2,500 and the $5,000, and then you're money ahead from there on. Even if you have a claim somewhere down the line, you're still money ahead. So it's a great strategic use of your dollars. You want the coverage to always be on target. We're very happy. A lot of our clients now are asking us to review their policies, that they know what's going on with them. We send out to all of our customers what we call our insurance, landlord insurance boot camp. Tells you a lot about insurance generically. And it's based a lot upon the Safeco contract. So if they see that, they know pretty much what they have. But definitely know what you have. If you have any questions, you call us, and we'll be more than happy to help you. Professional property management, crucial, absolutely crucial to your experience with insurance. As I think I've shown you throughout here, I just can't emphasize it enough. They will keep you from having an exclusion happen to you, because they're going to be on top of making sure that any repairs to your property, or if they require permits, the permits can be done. They're going to have licensed people and insured people on your premises. They're going to prevent the snow angel, the ice angel, from showing up in your house because while it was vacant, they winterized the home. All those things that they're going to do for you, very, 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 very important. This is something I want to pick up just real quick. We're almost done. There's just one coverage difference really with a townhome or a condominium versus what you'll do with a single family home. But there's another way we address similarities. The coverage difference is that we don't insure the structure, the exterior of the structure, typically on a condominium. Sometimes we do, those are rarities. But usually we're covering the inside from the firewalls in, or maybe just for your pure improvements to the property. But you need to make sure that you know what you have. You ask your property management company for the HOA what their requirements are if you have a condo or a townhome. You're not going to get the extended replacement costs. We have to factor those things in. Be aware of that. We will cover loss assessment. We'll give you up to $50,000 of coverage. At least that's what we recommend. You might knock it down to $15,000, but we'd recommend $50,000. Also, what's important, there's a coverage called, and I don't see it here, I apparently failed to put it in. It's what they call improvements and betterment, or unit owners improvements that you can add on to your policy. That's where you pick up interior structure coverage. It's called unit owners coverage. So we recommend that you have that in all policy, not just $5,000 or $10,000. You want, if you have a 1,000 square foot condominium or townhome, you're going to want probably $150,000 of interior coverage, unless your HOA says we cover everything except the deductible. Then we just have to maybe meet the deductible and bump it up a little above that for security for you. So just be aware of those things. Also want to mention to you what an umbrella is. Marshall Reddick himself, high believer in the strong believer in the umbrella policies, as is the rest of Marshall Reddick people. This is your extra liability. This is where you get a real bad claim. Someone's severely injured on the property. They come after you, and they're asking for a lot more than the a lot more than the $500,000 you have. That's what your $1 million umbrella is for. That $1 million will also extend over, as you can see in this example right here. It'll extend over your car, your home, and your other rental properties as well. So you're adding limits of coverage onto your policy that are very, very, very important, not only to your current rental property you might be buying, but to anything else that you own. Very, very important. And the policies discount each other, so it ends up being a nice purchase. That's it in terms of the basic coverages. I want to tell you a little bit about our Safeco service system and travelers as well. Safeco, we have a 24/7 line that you can call and get service to assist you. It's live domestic United States service people, and they're all licensed, and they are ready to help you again 24/7, 365 days a year. 7 days a week, but not 24/7. You can actually buy insurance policies directly from Safeco. You just tell them you're with us, and they know who we are. And if you call that number is actually dedicated to us. They will absolutely know who you are, and you will get everything that we want you to have. They know what to do. Travelers has something similar. It's an almost 24/7 live service center. It is 24/7 during the week. Weekends, it's like 8 in the morning till around 10 o'clock at night. So not quite 24/7. That's also a live service center for you. It's nice having people you can talk to, because claims and the need for auto ID cards as you're renting a card and you need something at the counter, like I just did right before I got online here for a customer. We arranged it for them to have an ID card at the rental car counter. So it is something that can be done very quickly for you. That's a nice feature that we provide for you. So that really tells you a lot about what you can get. So that you know what we do is we just don't wing ding this. We're not just looking at what you're buying for the property. We look at each property online if there's an online link available. If not, the Reddick people generally have the ability to send us, if there's a model home, we'll be able to see what the homes look like and how they're going to be built, so we can estimate a replacement cost. We look all over. If your home's a couple years old, we are all over the internet looking for information. Usually on those, we can see them inside and out, so we know how to establish the initial replacement cost. The insurance marketplace right at the moment, as you know, it's in turmoil. It's a crazy, 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 crazy market. We have the markets and the broker relationships to serve you, and really we are the competition. We put things together a long time ago from Marshall Reddick that other companies took a while to catch on to. Additional features of our program, we're going to keep pace with replacement costs. Again, we're protecting your rental income if damages occur. We will inspect your property, so that for some reason we had some bad information. This occurs every once in a while. We'll get a note from Safeco saying that the property needs to be changed. It'll go both ways, either down in insurable value or up. So we're not over-insuring you or under-insuring you. They don't do interior. You don't have to worry about that. It's an exterior inspection, but they will look at it. There are discounts for new roofs. If you have a property that's 20 years of age, you get a new roof, or you let us know so we can discount your insurance for you. The property management also provides you a significant discount. Safeco, when we use them, they have online in their offices, the people that talk to you about new policies, they have our profile of what we want you to have in their monitors. When you come in on our line, our information pops up, and they will do exactly what we want them to do for you. So there's some real consistency here within our program. And our teams are open 24/7, and there we go, and we're done. And that's Michael, that's me. That's how you get a hold of us. And I think we're back to AJ.
All right, thanks a lot, Stan. This is great information as always. Sorry, what happened? Hey. All right, so like I mentioned before, I am a advisor here at Marshall Reddick, so you could always book a complimentary consultation with any of our advisors. What we always do is go over this wheel here. First off, what's your goal? So, are you looking to buy an investment property this year? Are you looking to invest in the mortgage fund? Do you already own property and need a property manager? So we always want to focus on you and your goals. Then we can evaluate your options. Then we can go over a time frame of when you're trying to achieve those goals, and then set your criteria based off of what your goals are. From there, we can identify markets that you want to be in to achieve your goals, and introduce you to all the key players in those markets where we can specifically start tackling whatever your goals are. So I'm available any day of the week, anytime. My email and contact information is here. And yeah, it was great talking to all you guys this evening. And thank you, Stan, for your time and your wisdom and knowledge on insurance. And we look forward to talking with you guys sometime here soon. Thanks so much.